Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after the whipsaw price action overnight from that 72.60.70 area, which is the 60-day moving average, the market's posted a gravestone doji and now puts some concern that a bearish sentiment is strengthening. With that being said though, the level at 71.45 is seen minor and if broken would expose the region down to 70.90, where I do anticipate a bullish response. Looking ahead though, the market now waits for the US ADP employment change for May to get a further clues, that is, for this Friday's US non-farm payrolls. It is assessed though that the market may find a little bit more clarity with tonight's figures in terms of seeing how the market will unfold into Friday's jobs numbers. Nevertheless, I feel this market, for the Australian dollar that is, will ease lower towards that 70.90 due to the rejection, and then maybe into next week we might see a little firmer pace, where there's been a lot of talk that we might see an interest rate hike from the RBA anywhere from 15 to 40 basis points, as it currently stands at 0.35%. The euro is suffering further losses after the US dollar, which measures the greenback strength against a basket of 6 major currencies, surged overnight from 101.80 to 102.62.72 highs. It is assessed though from the recent retreat from 107.85 in the euro and now pressures the next target, which is 106.25. A break there would give further concerns and maybe even see a drop down towards the region of 104.90. For those who are playing from a long side, that is, to the euro, the market may find some stop losses will be triggered under 106.25. Although the view for dollar yen was somewhat negative a few days ago around that 127 level, and from the rebound now has put a bit of a cloud over the recent bearish case. As long as we don't close above 130.15.35, then I feel the market will eventually pull back towards that bottom side of the range, seen somewhere around that 126.75 to 128.20 support. But a close over 130.35 will leave me neutral in short term. Seems the pound is taking further losses over the last 12 hours and now looks towards the level of 124.65 to 124.15. However, I feel there is bargain hunters at that lower side of the range around 124.15 due to the fact that the Bank of England, there's been much talk they may hike rates 50 basis points, and that in terms should strengthen the pound and maybe see a rebound back towards the 125 to 126 area. I wouldn't get too short down at this level here, just in case we do see a snap to the upside. The reason behind this view is the recent annual UK Consumer Price Index, or the CPI, that was released came in at 9%, and this is seen as the highest since 1982. So therefore there will be a lot of talk in whether the Bank of England will hike interest rates by 50 basis points. Sterling Kiwi still remains weak, and I feel that as the level of 192.5 is worn away, that exposes the region of 191 figure 30, which is the preferred call. However, although there's a bearish outside range day, keep an eye on this RSI as there is some bullish divergence and therefore could see a little bit of a whipsaw price action into tonight's session. However, above 193, up towards 193.80, I feel the supply will increase and eventually see the market turn around and look towards that base at 191. Well, it was a whipsaw price action overnight and the gold failed to close above the level that I was looking at, which was at 1,838. With a slight bid coming back into the market, to some surprise, as the US dollar is also strong, I feel the gold may actually give up its gains as we head closer towards 1,852 to 56. If so, then we could see another down test and eventually see the market fall towards the region of 1,810.12. Wrapping up with oil, well, from the rejection of 118, the posted key reversal has been confirmed after the close of under 113. In light of that pattern, the market should continue on, and that is towards 106.2070, and then maybe see some profit taking returning back. Also, the market will be keeping a very close watch on the OPEC policy meeting that is due to be commenced, that is, later today. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.